the two ways to log into the Harmonics Scanner. You can either go to im.center, go into your strategies, then you will see FRX, then click on Harmonics Scanner, HS. Then it will take you to this page, or you can just save yourself the stress and not waste your own time. Just come to your browser, put in harmonics.im. It is highlighted right now in my browser, harmonics.im. This will take you to the IM Center Harmonics Scanner login page. You will see this interface. It looks really scary. It's as if you won't understand what's actually going on. But trust me, it's not that deep. For most of us, we are actually trading Forex with our mobile phone. So to access the Harmonics Scanner with this view, for you to see just this way it is displayed right now, because if it's not displaying this way, you might not be able to use it conveniently. So you need it to give you a desktop display. No matter what phone you are using, be it an iPhone or any Android, just download Chrome browser, Google Chrome browser. Download it on your phone, then you use it to log in into harmonics.im. Then when it loads, you enable desktop view, okay? You enable desktop view. Once you enable desktop view in your Chrome browser, it will display any page you open like a desktop website. It will not make it responsive and turn it to a mobile phone website. It will make it look like a desktop website. All right, so the big question is, how do I use the Harmonics Scanner? Because you just come here, nobody's giving you any signal anywhere. You're not seeing anything anywhere. How will you just now wake up and start walking up and down looking for signal on your own? It's very easy. This is what I use to trade, and it's been working for me anyway. So let's go over the most important things inside this scanner right now. As you can see, there are three sides to this. On the left panel, you can see the drawing tools. Then this panel right now, you can see different products. HS is Harmonics Scanner, VB is Vibrata, GC is Gold Cup, LV is Levels, and on and on. So what you now need to know is this top panel. You can see broker. It's showing different brokers, and I will explain to you how the broker works and how it affects and it doesn't affect you. The scanner is the same thing as what you are seeing right here, but you don't need it, so leave it. Help, you don't need help. So the next thing you need to know is this place right now. You can see where my mouse is. This 30 minutes showing right here is telling you this chart we are seeing right now is on a 30 minutes time frame. The next thing is the candle. You can change it to lines. You can see it has changed. You can change it to Olo candles. You can change it to a Sinki Ashi. You can change it to area. So that's just about anything you want to do. Then this is where you add and remove indicators. You can see different indicators here. If you want to know more about different indicators, you can put it on YouTube and it will explain to you the different indicators that exist and how to use them. So you find your favorites. You can always leave a comment on any of my videos on whichever video you want to see next, and I will work on it, okay? All right, so let me move on. So as I was saying, the next and the most important thing right now, see where my mouse is moving over right now. You can see FOREX. FOREX is a broker. It's showing you the broker that we are viewing this chart on right now. Then the next thing is the currency pair, NZD/USD. Then M30 again, you can see this is the time frame. You can see 30 minutes, M30 time frame. Then Gatley. Gatley is a pattern. When you want to use the Harmonics Scanner, there are some things you take note of. You take note of the broker, you take note of the time frame, the currency pair, and the pattern. The pattern, there are different patterns. Shark pattern, as you can see over here, you can see Cypher, Shark, Gatley, Bats, Deep Shark, different patterns. So if you want to study harmonics pattern as a whole, you can do that on your own. I have done that in the past and it's really helping me. It has given me a better understanding. So those are the four important things. The broker, the time frame, the currency pair, and the pattern. So you can see over here right now, this is the information of this chart we are seeing right now. It is telling you on FOREX broker, select FOREX. If I tell you on WhatsApp that, do you know what, Sandra or BB or John, there's a fresh trade on the Harmonics Scanner. You can check it out. FOREX, NZD/USD, M30, Gatley. You will just rush into the Harmonics Scanner, you log in, come right here, select FOREX. When you select FOREX, go to M30 time frame. then select NZD-USD Gateway. That is it. You will see the chart. Then you'll be able to now analyze the information I'm about to move on to next, which is how to know where your entry price is, where your stop loss is, and where your take profit is, and how to determine if it's a buy trade or a sell trade. So let's move on to the broker. You see right here, there are different brokers. FX Choice. You can see on FX Choice, we have a different set of trades. Different set of trades. And the latest trade from FX Choice right now is EURCAD Gateway. Clicking on that right now on the M15 time frame, look at this place now. You can see FX Choice, EURCAD, M15 Gateway. Merely telling your friend this alone, FX Choice, EURCAD, M15 Gateway, your friend knows where to go. And he or she will actually enter that same trade without frustration, without questions. So now, you understand that. Let me now tell you how the broker comes in and what they stand for. So many people ask me so many times, I'm using not Forex now, but this trade is on FX Choice. Does it matter? I'm not using FX Choice as a broker. Does it matter? I'm not using GBE as a broker. Does it matter? My broker is HUGOSWAY. My broker is xm.com. Does it matter? No, it does not matter. Whatever broker you are using does not affect anything. The only purpose this broker is serving here right now, for me, I always say this every time. The fact that this is the way I see the Harmonics Scanner and I use the Harmonics Scanner does not mean that is the only way to use the Harmonics Scanner. It means this is the way I use the Harmonics Scanner and it has been working for me. The broker now doesn't mean anything to me. The fact that I'm not using FX Choice doesn't mean I can't take a trade from FX Choice. FX Choice in this case now is just only serving like a signal provider. You can see the latest trade from FX Choice right now is EURCAD. So if I now say because I don't use FX Choice and I see a fresh setup, then I don't take it. Does that make any sense? It doesn't matter. So let's move on. Let's go to xm.com, another broker. You can see xm.com has the same NUD-USD Gateway on a 15-minute chart. So that is why it's important to always emphasize the broker and the time frame, because it might be the same currency pair but be a different pattern at a different time. So you don't want your friend to take the wrong trade and you tell your friend it has ETP and your friend is telling you he's going towards stop loss. So you want to make sure you guys are on the same page. Right now, this is xm.com broker, M15 time frame, NUD-USD, NZD-USD Gateway, and you can see it here, xm.com, NZD-USD, M15 Gateway. So that is the broker now. I've explained to you right now that the broker you use does not matter. Just pick any broker and look for a new trade. So now I'm going to show you how to discover and find a fresh trade setup. All right, guys. So I want you to follow me closely now. It's getting to the very, very, very serious part where you need to pay attention. All right, guys. So I want you to look closely now on this chart right here. This chart, let me highlight it. On this chart right here, you can see it. There are so many details going on at the same time. There are so many information going on right now, as you can see on this chart. And I know you are wondering, where do I start from? What do I do? It's very simple. There are just 4 things you need to know: where your stop loss is, where your entry price is, where your take profit is, and you have to determine if the trade is a buy or a sell. That is the end of it. All right, so let me remove this rectangle right now. Okay, good. So guys, if you look at the middle of the chart, you can see the pattern. And this is what the Harmonics Scanner is actually doing. It is scanning the market to give you this pattern. Let me actually see if I can delete this pattern and draw it again. So assuming you open the NZD-USD charts, this is what you will see normally. But the scanner has been able to go into it, then draw out an harmonics pattern. This is what is called a pattern in harmonics. So right now, this is a Gateway pattern. There are different patterns. We have the bat, we have the shark, we have the deep crab, we have the crab, and so on and so forth. Someone said it's a buy, and I'm happy someone can actually see this as a buy. Because number one, now we've seen the pattern, which is obviously irrelevant to you at this point, but I just want to point to you, that's one thing you need to look at. Then the second thing, we need to know where the trade started from. You can see right here on the left, you can see TP3, TP2, TP1. entry, stop loss. So whenever you look at the left and the first thing on top is your take profit 3 and below is stop loss, then it is a buy trade. Okay? And that makes your point D at the bottom and your point C at the top. The harmonic scanner actually is the formation of the X, you can see X right here, X, A, B, C, D pattern. So anytime you are going towards take profit, you are heading to point C back again from point D. So right now, the entry price is on point D. You can see this lemon line. Guys, look closely. You can see the lemon line where entry is written under it. Let me mark it out again with a very thick line. You can see that fat blue line. Let me change it to lemon. The point D is always your entry. You can see point D right here is always your entry. Don't mind my pattern that is now purple. That's the setting I set earlier. I deleted the original pattern. So you can see the point D. You can see D here. Look at it to the left. That is your entry. Wherever point D is, that is your entry. Wherever point C is, that is where you are heading to. That is your take profit 3. Then your stop loss will automatically be below your entry price. Or if it's a sell trade, it will be on top of your entry price. I will show you the example. But right now, we are in a buy trade. And I'll show you how to actually still go further and know what direction you are going towards. This is our entry price right now. You can see the stop loss. So if you are going into the market, I want to ask you guys a question. If you are going into any trade and you enter the trade and you hope the market goes up to make money, and you hope when it comes down, that means you are losing and it should take you out. What sort of trade is that? Is it a buy or a sell? The principle is always the same. Whenever you are entering a market and you hope the price goes up so you can make money from it, that means you want to buy. And whenever you enter into the market and you hope the price goes down in a bearish move to make money, that means you want to sell. This is a buy trade. So this is the point D. So what do you now to determine next? We need to know if the trade is still valid. Guys, from the point D, if they put our TP1 right here on this dotted line and put TP1 under it, that means that is where we are taking profit from. So at this point, this dotted line now, we expect the market to get to that point and we hit TP because you can see it here. This is your TP1. Let me mark it out in a box. This is TP1. Then TP2 right here. Then TP3 right here. Looking at the trend line, the lemon trend line I drew right now, look at it closely. Before you answer that question, I need you to make sure you know you are answering the right question as if this is an exam. Looking at the lemon trend line I drew up, upward trend, has the trade hit TP1 or not? Where TP1 is marked, the dotted line that goes to that point where I marked, has it hit TP1 or not? So if I have entered this trade from the beginning, where I discovered this is a valid trade, then I ride it all the way to TP2, I must have made 48 pips. If I use 0.0 lot size, that is $4.8. Let's say $5. If I use 0.02, that is $10. If I use 0.03, that is $15. So that is it. Looking at this now, it has hit TP1 and 2, but you can see obviously no candle has gone to TP3. So that is how to know if a trade has entered TP3 or not. I entered this trade from point D. I have entered this trade. I told you about the trade. You didn't take it on time. I've hit TP1 and 2. I've taken 50 pips. Then you now come into the harmonic scanner. You now see, because it's the latest trade from xm.com, you now feel it's still valid. No, it is not valid again. I have taken 50 pips and you just want to jump into the trade. What if this happens? This downward slope that is happening right now, it should just continue. These downward slopes, you just continue this way, come all the way down and hit stop loss. Let's calculate how many pips you'll be losing. From the stop loss all the way to TP2 where you jumped into the trade, you will have lost 85 pips. That is $8 on a 1.01 lot size, $16 on 0.02, $24 on 0.03, and that is $40 on 0.05. Why do you want to keep losing money? This trade is certified invalid. All right, guys, so you can see this is certified gone. This trade is gone. It is gone. Don't be covetous. Don't be greedy. Greed is one of the greatest enemies of any forex trader. So forget this trade. Whoever is in this trade, by the time it started retracing from the TP2, the person will jump out and run away with his profits. So that is that, guys. This is an invalid trade. So this is why you now need to change the broker and the time frame to look for a fresh setup. This is it. It's very simple. I explained to you right now that, see, looking at this green trend line I drew right here, you can see where TP is written here in this box. That is why I actually had to cut out this box and make it blue so you can see it. This is TP1, this is TP2, this is TP3. Guys, forex is a career, and if you want to be successful as a forex trader, you need to be able to pay attention to details. Don't rush, don't be greedy, don't revenge, don't put emotions into trading. Looking at this lemon line right now, this trader has gone to TP1 on this dotted blue line and is at TP2 now, this second dotted blue line. You can see the market is here right now. Then I was just creating a scenario that what if it keeps heading this way and hit the stop loss? Then I now draw this other line on it to show you I will not go into this trade. For me, it's a no-no. I've cancelled that trade. As you can see, the only thing left now, why someone else will jump into this trade, is from TP2 to TP3. I would never do that. The trade on top is the most recent, and the trade at the bottom is the oldest. Is the oldest trade on this trade. Let's go to EUR/AUD Shark. Let me just point out something. EUR/AUD Shark. Guys, as you can see, look at this trade right now. I want you guys to see something. The trade has not only gone from entry price to its TP1C from point D all the way here. It almost hit TP3. Then it retraced back again, then went all the way again from this point and hit TP3, went through the roof. If there was a TP4, it would have hit TP4. Let's assume that there was a TP4 right here on this. I think there's a support right here. So let's say there's TP4 there. Let's say there was a TP4 over here. Let's say there was a TP4 there. You can see that it will have smashed through the TP4. Then it started coming back, retracing back to TP3, then back to TP2. Then a new support is forming on TP2. Another pattern entirely is forming. So what are you now looking for? If you look closely, another harmonics pattern has formed. Let's forget this right now. Then you can see the trade at the bottom is the oldest, and the one on top is the most recent. And now the most recent trade on NZD/USD is also gone. TP1 and 2 hit already. I don't do TP3 anytime, any sort of trade. I don't do TP3. No matter who is giving me, I don't do TP3. So what's the point? This trade for me is concluded. All right. So now we need to change the time frame. So now I said to look for another trade setup. We are still on XM.com. You never can tell. They might still have fresh setup on other time frames. So before we change broker, let us change time frame. That is the first thing we want to do now. All right. So M30, go to M30. You can see it's still the same NZD/USD. Just showing us on the M30 time frame. You can see all my markings are not here because this is not the time frame I actually was on before. You can see even on the 30 minutes time frame is validating that trade. It has ETP1, ETP2, then come back again to TP1. So that is that. That means obviously we need to look for another trade on H1. Still the same trade. There are sometimes some brokers, they see the same trade on different time frames. So it depends on how your trading style, how long you want to be in the trade for. So H4, you can see there's a different trade setup on H4, Euro GPP cipher. So before I give up on any broker, I want to check all the time frames. Okay, all right, guys. So even this one right now on the H4 time frame, you can see that it has gone from point D. The next candle that formed smashed through TP1. Now, if you are in this trade already from the entry price, you are only waiting to hit TP2. Or if you are the type that loves to risk it all and wait for TP3, it's fine. But for someone that is just opening a Harmonics Scanner now, and you say, this is a new trade, though. I can't see plenty candle. It's still valid, though. Right there, you're about to lose money in case anything goes wrong. Okay? So we need to look for another trade, all right? Obviously, now we've gone through the whole of XM.com and we've come to a conclusion that till further notice, probably in the next 1 hour, 30 minutes, they don't have a fresh trade setup. You can always check from time to time. So now we've concluded xm.com. We need to come back sometimes and check later for another trade setup. So we just look for another broker, Ghana Trader. Then they have the same setup on H4. That doesn't mean it's the same. You can see another candle has already formed on Ghana Trader and is a sell candle. It can still actually go the other way and ETP2. You see, it has turned blue. For someone inside this trade now, this person will be anticipating the candle to still keep going up. But if you jump into this trade right now, what if it goes down? You're in problem. On an H4 time frame, do you know how many pips that will be if you lose this trade? It will take 4 hours for a candle to form. That is 75 pips already if you lose this trade. That is $7.5 on a 1.01 lot size, $15 on 0.02. That's on LD for someone with an $100 account. Let's move on to another broker. Let's go to FX Choice. I'll show you that on FX Choice. How do we know the trade is recent? The latest trade on top, that's the most recent trade. If you check that, you can check the next one after that or the third one. That might still be valid. So on M15 time frame now, FX Choice, let's pick Euro CAD. This one has also hit from point D, which is entry. It has ETP1. Now it is actually consolidating. It's consolidating. You can see it's just going sideways. So that is that. So let's move on, guys. Let's check Euro GBP. You never can tell. Sci-fi. That one too has also ETP1. Guys, you can see that so far so good. Only one trade has hit stop loss. Everything we've been saying ETP1, ETP2, ETP1, ETP2. It is heading towards TP2. So that is that. So let's move on. So on M30 time frame, let's see the first setup. Still the same Euro CAD. Let's check the H1 time frame. Still the same. Okay, Euro GBP now. Sci-fi. It has ETP1. Today is a very good day, my guys. Today is a very good day. TP1 heading towards TP2. You can see for someone who took all this trade earlier, the person is in money. Easy peasy, no stress. You don't need to start worrying yourself when is there's no new signal. They are not dropping signal. What's happening? See, this is a sell trade now. We didn't talk about how to know a sell trade. So you can see it has smashed. The red candles are forming really bad. It has smashed TP1, smashed TP2. And you never can tell. The next candle that wants to form might just go through TP2 to TP3. And that is it, guys. We are in money. Let's count the pips. So assuming we enter from point D all the way to TP2 right now, let's say we are in up to TP2. Wow. On the H4 time frame, we must have made 115 pips. That is $11 for 0.01 lot size, $22 for 0.02 lot size, and $33 for 0.03 lot size. 0.05 lot size is $55. Just one single trade, $55. If you are using a 0.05 lot size and you set this stop loss, that means you'll be risking how many pips? Let's say 60 pips. 60 pips times 0.05 lot size. That's $30. The time frame is only telling you how long it takes a single candle to form. You want to write that somewhere if you know you won't remember. Each candle you see on this chart right now has taken 4 hours to form. Each candle. It took each candle 4 hours to form. Right now, this fourth candle right now, this candle here right now, once 4 hours is complete, another candle will form and it will take another 4 hours. That means if you enter this trade from point D right now, today you must have spent 4 hours, 4 hours. That's 16 hours. 12 hours. These three candles, 12 hours. You must have spent 12 hours on this trade. But it doesn't matter if I can do other things with my life. That is why I love H4 and H1 time frame trades. It takes longer to ETP, but it gives you a lot of pips. Instead of struggling, taking like 40 trades, taking away 50 cents, $1.20, $1.08, 87 cents. How long do you want to keep doing that for? So if you can actually weigh your loss, calculate your profit, and if you have a micro account size, is good. You can do the unexpected. You can even use 0.10 on a micro account size. Most of us use standard accounts, and why I encourage standard accounts is so that you can learn discipline. Let's move on. So on FX trade right now, luckily for someone might have entered this trade, boom, you're in money. Then let's look at Euro GBP. Right now, it has ETP1, but it's still forming. It's as if this is going to TP2. But if you understand other analysis and you can use indicators, which is what we are discussing next, you'll be able to actually predict, at least to some extent, the direction of the market. Do you just understand that? If you can understand indicators and how to analyze support and resistance, trend lines, using all this together, you can actually predict the direction of the market to an extent. I'm not saying it's 100%. Now I've showed you how to use the different brokers, how to use the different time frames to look for a new trade. So just keep looking, just keep searching till you find a valid trade. If you can't find it, valid trade, and it's a day like this that you see that it seems everything is slow, we found a valid trade. Can someone tell me why this trade is valid? Thank you. It is just at the entry price. At the entry price on an H4 time frame. Guys, I don't know about you. I need to know when to enter this trade, so don't rush it, okay? And that is what is taking me to the next thing we want to discuss, and that is indicators. I actually want to use 2 different indicators right now to determine my entry, or even 3. I'll check on 3. On 2, then I'll use my RSI to actually validate it.
Thank you. If you're on the H4 time frame here on the Harmonics Scanner and you're about to go and trade, are you advised to also use the H4, or you can use any other time frame?
Yes, darling. You need to use the H4 time frame in your MetaTrader 4 because so that you can monitor your candle formations, so you don't panic out of a trade. If on an H4 time frame right now, the candle is saying sell on, and let me just change the time frame here. This is just for reference sake and just to show you what I'm saying. You can see it has even formed different candles on the H1 time frame. This might destroy your analysis. This might make you panic. You can see on the 15 minutes time frame is actually a buy candle. It's a blue candle. Different candles are formed. This can misinform you and make you make mistakes. It can make you panic out of the trade, throw you out of the trade. You understand? Right now, it's showing buy, but on the bigger time frame, it's still saying sell. You don't want to jump into a trade. So if the H4 time frames can be trade, you want to stick to the H4 time frame to keep analyzing it. That is the whole point of entering that time frame in your MetaTrader 4. MetaTrader 4 doesn't need that value. You are the one that needs it. You need it to monitor your trade. Why you are saying sell is because the candle forming right now on the point D is still a sell candle that is taking us to the point D. So we have to actually wait for the candle to conclude its journey before we jump into the trade. You understand?
Okay. We have to wait for the red candle to finish start forming the blue candle before we can jump in.
For the sake of class, let me just go into one of my trading view and look for it.
Trading view.
Yes, trading view. You can do this. There are 2 ways to access trading view. Go to your App Store or iOS Store, download Trading View, the app, Trading View, or for easy access, go to tradingview.com. But why I download the app is so that I can set alerts, I can do many things. All right, everyone. So this is our lovely GBPCAD. So let me show you carefully now. You can see on the 4-hour chart, this is H1. I need to change it to, you see now, I need to change it to 4 hours so I don't mistake myself. I don't go and do the wrong thing thinking I'm right. Hold on.
Wait, I think I'm lost.
Don't worry. Don't stress yourself. Don't stress yourself. You don't need to stress yourself. I just want to replicate it so you can see what I'm saying. It's not as if you need to do this. Even if you mark only your TP and your stop loss is enough. So you can see that this what you are seeing right here is the same thing you are seeing here right now. Can you see that? And look at this red candle. This candle we're talking about, we're discussing. This is the same candle that is forming right now on the Harmonics Scanner. Can you see it? The same red candle. It is back at the entry. The exact entry point. It is now back at the entry. Let me now tell you why you will have shoot yourself in the leg if you just jump into this trade. Let me mark that entry. Boom. That is that. Lemon. Where are this is lemon. Then I'll show you how they got their TP1, TP2, and TP3. But this one is some next level thing. So I just hope you can take your time and also learn. If you can learn properly, you will actually love Forex. Forex will become like playing game to you. You'll be able to enjoy the wins, the loss, and everything. Okay, so as I was saying, guys, you can see that this candle now, it is still red. And right now, it's still selling. It's still selling. So look to the left, to the right, where this, what's it called? The current market prices. You can see the current market price. The current market price on any chart, maybe MT4, Harmonics Scanner, anywhere, is the price that is moving. That is CMP, current market price. And if you look right now, you see one price in the red box going up, 1.70273. And under it, you can see time reading. So that means on this candle now, on this 4 hours candle now, we have just 15 minutes and 16 seconds left. That is the information this is telling you right now. There's so much power in learning, and there's so much information that is inside just one small thing. If you can actually look closer. Right now, I know how long is remaining for me to decide my fate. We have 12 minutes left on the current market price. Current market price is the price that is moving. You can see this red highlighted price that is moving up and down. Right now is 1.70279. And you can see time under it, 12 minutes, 41 seconds. It's moving. That's the current market price. Because it's selling, that is why it is red right now. When it starts buying, it will turn blue or green, depending on your candle. If you change the color of your buy candle, if it's buying, it will change. If it's selling, it will change. So the color doesn't matter. It is only telling you how long is remaining and the current market price. Right now, we want to validate this trade if we should actually buy it the way it is telling us to buy. And in order to do that, before I used 2 indicators, but now it's 3. And tomorrow it might be 4. So, but don't overuse indicators. Don't use too many indicators. I don't use them together and I don't pack them up. So automatically, right here, we have the RSI. That is the first indicator I use. But in MetaTrader 4, you will not see it there by default. You have to put it yourself. There are 3 indicators we'll be discussing briefly. If you want to know more about them, you can just Google them. But I'll be showing you how to use it and why it works for this particular strategy. All right, guys. So the first thing is the RSI. I said RSI means Relative Strength Index. Please write this down if you have a pen or paper or you want to jot it on your phone. Relative Strength Index. And how to use it is whenever the RSI, the current market price on RSI is saying 30 and below. If the number on the RSI is showing you 30 and below or close to 30 and below, that means the market is oversold and it will soon start buying. And I will show you some examples on this RSI right now. You can see the RSI. Let me change the RSI settings. So let me disable it. See, it's gone. It's showing now. And you can see RSI is written here. You can see this number that is here, 42 points, blah, blah, blah. You can see it's changing as I'm moving my cursor from one point to the other. That is what the RSI is saying at every point that cursor is. As I was saying, the RSI, Relative Strength Index, whenever you point, let me mark out with a vertical line. Let me mark it out with a vertical line. This is where we are right now. Let's move to this point. Where RSI is written, right here. Let me mark out the box. Because, see, inside this box, let me change the color so you can see properly. Can you see? Inside the yellow box, can you see the number that is changing? That is where to see the number the RSI is saying right now. Every time, everywhere you put your cursor, RSI or Harmonics Scanner. This is the Harmonics Scanner. This is the Harmonics Scanner. But the RSI is there, is an indicator. It's there by default. It's one of the indicators we'll be using, and it's there by default. So just listen to this, write this down. You can watch videos on all this later. Whenever the RSI is saying 30 and below, 30 and below, or close to 30 and below, it is telling you the market is oversold and is about to start doing what? To start buying. Whenever anything is oversold, it means to start buying. Let's say you have a store now and you sell wine, and people keep coming. It's Valentine's Day. People keep coming to your store, and they keep buying all your wines. You run out of this brand, that brand, you run out of everything. Please, do you have anything to sell again when you've oversold everything you have? You have nothing to sell. The only thing you need to do now, you need to go and start buying. You need to go and look for where to buy again in order for you to stock your store. So that is why whenever the RSI says the market is oversold, that time is the perfect time to buy. Whenever the RSI, I feel you. Whenever the RSI, not the Harmonics Scanner, whenever we are inside the Harmonics Scanner, but this RSI can be used anywhere. It's just an indicator, and luckily for us, it's here by default. So whenever the RSI is saying 30 or below, it is telling you the market is oversold. It will start buying. So when the next candle forms and it's a buy candle, you just need to ride that trend and buy. So whenever the RSI is showing 70 and above, it's saying the market is overbought. You need to start selling. And at that point, the market will sell. So let me just show you. So right here, you can see on this blue vertical line I drew, we have CADJPY, and it's just actually forming on the M15 time frame. CADJPY is a fresh trade, is on the way to the entry too, but I don't know, don't rush it. You might want to sit down and analyze it. After I show you how to analyze it, we have CADJPY on the M15 time frame. You can see now a new trade setup as we were talking. A new trade setup has formed. Okay, let's go to where we were before, Traders Way. Okay, GBPCAD. Yeah, now we have it. You can see that the current market price has even gone below past entry price, heading towards stop loss. That is why you need to chill. Another candle has formed and is a buy candle. Yes, the RSI is on trading view. Another candle has formed, is a buy candle. Can you guys see it? It's still very tiny, but it has formed. It is blue. You know the other time I told you have about 15 minutes left on that candle. Oh, whoa, we're running out of time. 10 minutes more. After this, we might just have one more round and that will be it. All right. So can you see another candle is forming and it's buying? Because on the RSI at the point D, let me show you briefly on the point D. The RSI is saying 41. For me, it's not enough for me to enter the trade. But because you can see the trend, it's really low. It's really low. I will have bought, and you can see it's buying. So guys, let me now show you the second indicator, and I hope you are not wrong, as I'm about to bring up this indicator. That's the Ichimoku cloud. We have 9 minutes, 6 minutes more. So after this 6 minutes, guys, join back. So I'll show you how to take TP before TP, then we move on to the next thing. So this is the Ichimoku cloud. And on the Ichimoku cloud, there are 4 things you want to note. I'll just run it briefly. You can actually read about the Ichimoku cloud on your own. Our trade is retracing. I hope it goes the way we want, and hopefully we make some money from it. And if we don't, all good. All right. So anyway, as I was saying, on the Ichimoku cloud, there are 4 things you need to know. We have the lagging span, we have the conversion line, we have the baseline, and we have the cloud itself. So the cloud right now is this cloud you are seeing is very simple to see now. Let me modify it so it will be easy to see. Let me modify it, but you need to learn to see the way it is so you can actually. I'll change my lagging span to yellow. So yeah, that's orange. My lagging span. I'll make it really obvious so you can see it. Then I'll make my lead. I'll disable the lead. I'll disable the second lead, and I'll give my cloud more color. When it's buying, I want it to be deep green for it to show. When it's selling, I want it to be deep red for it to show. So I don't trade inside the cloud. Okay, now we have to observe the cloud. Right now, where's our candle? Our candle is not inside the cloud. This candle is actually outside the cloud. It is not inside the cloud. Right here, we have candles inside the cloud. But right here, we are outside the cloud. Right here, we are above the cloud. Right now, we are below the cloud. So that's the first thing you need to know. The second thing you need to know is the position of the conversion line. The conversion line is the blue line. You can see 2 lines here. Let me show you somewhere else. You can see this blue tiny line and this red tiny line. The blue line is the conversion line. I'm just rushing this. You can learn more on Ichimoku cloud on YouTube. The blue line is the conversion line. The red line is the baseline. the blue line, which is the conversion line, is just telling you the average movement of the market on a medium term, on a short term, and the red line is the baseline telling you the movement of the market on a medium and larger time frame. So anyway, I believe that explanation should be enough because I'm just rushing it. So whenever the blue line, notice this, whenever the blue line, look at this spot, I will mark it out with a rectangle. Whenever the blue line right here, whenever the blue line crosses the red line up, the market start buying, and you can see the trend the market went from that point. It went all the way up, and at this point, where the blue line now crossed back the red line again, it started doing what? It started selling, and that brought it there. Then again, the blue line crossed at this point, it started buying. Then it's still buying, but for some reasons, the cloud became red, and it was selling for some time temporarily. And is now the cloud in front is green. This is telling us it is going to buy. These are the things I said we should wait for. Now the cloud in front of us is green. And the lagging span is, you don't really need this right now. It's just for you to know the lagging span is the shadow of the market price. Whatever shape the current market price is taking, you can see it at the back on the lagging span. So that is it. And the cloud is like seeing the market in front, the mirror. The lagging span is the shadow. So that is it. Let's go to the second indicator, the last indicator which I want to show you guys. That is the alligator. So what is the RSI saying? What is the alligator saying? On MetaTrader 4, you will see Williams Alligator. That's the name. On the alligator, whenever the green line crosses the red line, whatever direction it crosses to, that means that's a midterm. It can be a midterm. If right now that it's pointing down, let me just use the trend line to show you. From here, the green line crossed the red line and the blue line all the way down here. Let me make my line black and very thick. You can see the green line crossed the red line. So that is telling you, pointing down is a sell. So, and what you are seeing right now, this formation is actually showing you what happened from point C to point D. So from point C to D, that is the formation you can see now on the alligator, this green candle. It actually smashed the red candle, smashed the blue candle. That was a deep sell all the way down. So now, looking at the RSI that is giving us a flat curve, that means we might be expecting a range anytime soon. We might be expecting price to just linger a bit on the same spot. So when it changes the direction upwards, when it makes an upward slope, that means then our buy is activated fully. So let's just hope this trade goes the way we want it. I'll be really happy. But if it doesn't, it's fine. It's one of those things. So whenever you see this green line now, let me use my drawing tool. Let me use brush. You see this green line now? You see this green line? If it continues this way, then go this way back up. Then if you buy, whenever it crosses the red line and blue line back up, that means it's ready to start buying. Right now, it's still building momentum. It's still trying to gain the direction it wants to go. And I suspect it will still go down a bit before going up. But whatever happens, guys, is all good. If you win this trade, even TP1 alone, from this point to TP1, that would be 55 pips or thereabouts. So whenever the green line crosses the red line and the blue line downwards, the market will sell. Whenever it crosses it upwards, the market will buy. Let me just delete these drawings so I don't confuse people. This is how I take profit before taking profit, before TP, the TP they give. So as I was saying, can you see that this one has ETP 1, 2, 3? All right. Let me now show you why I will take profit before every other person. So there's something called the Fibonacci retracement tool. You can also read that on YouTube, but you don't need that right now. I will just use it to show you the most important things. I've drawn it out. Let me take out the numbers I don't need. Okay, good. All right, guys. So on this tool now, you can see where it says 0. You can see where it says 0.382. You can see where it says 0.618. You can see where it says 1. I'm not telling you to actually look deep into it. I just want you to explain something to you. Yes, Gabby, that is it. I cut my loss short. You don't have to be greedy or develop emotions for the market. When you see a clear action, you just need to take it. Then let's move on. You can see that the zero is actually at point D. The point zero is actually at point D. Look closely. You see point D on the harmonics pattern. It is at point D. You can see at our entry. That's where zero is. That's where zero is on our entry price. Then see where 100 is. That is 1. That is point C. 1 is 100. 0.618 is 61.8%. 0.382 is 38%. And 0 is 0%. All right. So let's look at where we find our TP1 with the Fibonacci retracement tool. See 38.2% retracement. Look at it. Very close to TP1. Look at 61.8% retracement. Look at it. Very close to TP2. Look at 100% retracement. Very close to TP3. 95% of the time, this is where they take TP1, TP2, and TP3 from on harmonics pattern and the harmonics scanner. Depending on the pattern though, because different patterns varies, but most times you will find it on the 38.2% retracement, 61.8% retracement, and 100% retracement. So if the Fibonacci retracement tool now is actually telling me this is where the 38% retracement is, let's now calculate the distance between the 38.2% retracement and the TP1 the scanner gave us. That's 13 pips. So that means if I put my what's it called? 13 pips. Look at it. Let's now go to the candles actually before it hit TP1. So you can understand what I'm saying. Let me mark where the 31.8% retracement is. See, I know guys, you're tired, but this is very important information. See, look at this. Let me mark it out. Let me turn it to red. Let me make it B. All right. So guys, from the 38% retracement to the TP1, we have how many pips? We have, let's say 10 pips. 10 pips away. But look at something now. At this point, this red candle, it crossed this line, the 38.2% retracement line. Then what happened? It went into a range. If you look closely, you will realize that it did not hit TP. It did not hit TP. From this point, it did not hit TP. It just keep going on and on, on and on, on and on, till this blue candle that hit TP1. Even this red didn't hit TP. It just got really close to TP. It didn't hit TP. So when I wanted to take the trade the other time, what did I tell you? I told you I would take my profit 5 pips away from the TP. Let's now go to the closest candle that almost hit TP. Let's go to the closest candle. This is the red candle. So from this candle now, from the top of this candle to TP, how many pips? That is 6.7 pips. Let's say 7 pips. You know, if I have set my TP 5 pips away, that means it remains 2 pips for me to hit TP. Then I will still even be lucky enough, because that means after this candle, another candle for 15 minutes, another one, another one, another one, another one. 4 candles is 1 hour. Then another for 2 hours, another for 3 hours. Before it actually got to 5 pips away. 5 pips away at this point, this blue candle. You can see that if I have set my TP 5 pips away from TP, I will have ETP. Let's count the remaining number of candles that formed after that. I will have ETP 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours. I will have ETP 8 hours before you ETP. And you will still be in the same trade. You'll be lingering inside the same trade for 8 hours. Do you know how many things that can go wrong or go right in 8 hours? Luckily enough for us, the next candle that formed after the point D was a very strong red candle. And it did what? It smashed through TP1 and TP2. Can you see this single candle? But let's just go back to the facts. Look at TP1, look at 38.2% retracement. Is it close to TP1 or not? 38.2% retracement. Just a pip. On 61.8% retracement, that is TP2. Then look at your TP3 on 100% retracement. That is it. See, statistics, calculations, all these things, they don't lie. Whenever there's a formula, whenever there's a calculation to things, how things work actually, you have to actually know that is it. It works. So you can see this one too. It went from entry in just 4 candles. It hit TP1, TP2, TP3. Can you see that? Then from our entry price, you can see our 30.8% interest rate, just a few pips from TP. And you can see that it actually tested that point. It tested that point at this red candle. Can you see it? See this blue candle. It didn't TP. It almost hit TP. But if you have set our TP 5 pips away from TP, you know on this candle we'll have hit TP and we'll have gone. Instead of the next person waiting for this candle to form. What if the candle forms and the market went into a range? So that is why you need to set your TP a few pips away from TP. It's better to make a few pips and actually make profits than lose a lot of pips because you're actually running after something you could have avoided. I don't mind if I have to sacrifice 5 pips to retain my 35 pips. I don't mind if I have to sacrifice 40 pips to retain my 120 pips. I don't mind if I have to sacrifice 100 pips to retain my 700 pips. I don't mind. Okay. All right. So let's look for another chart to just establish that one more time, and we'll move on. And that will be it. All right, let's look for GBE. Let's look for a trade on GBE. H1. We've been forsaking H1. UAD, CAD, Shark. All right. This has ETP1, ETP2. This is a perfect example of what I'm looking for. From TP3, which is 100% retracement, all the way back to entry 1. Can you see? This one, 32.8%, 38.2% retracement, and 61.0% retracement are even exactly on TP1 and 2. So you can now see that the broker you are using doesn't really matter. To me, it doesn't matter. So that's why you take 5 pips away from TP. Yes, can you apply same to stop loss? No. Just leave stop loss the way it is. Look at this now. 38.2% retracement TP1, 61.8% retracement TP2. Look at TP1. Before it finally hit TP1 on this red strong candle, look at the number of candles. From here, look at here. We will have hit TP right here if we actually sacrificed how many pips? Hold on. Assuming we sacrifice 5 pips, hold on. Where's my ruler? Assuming we sacrifice 5 pips, we will have actually hit TP right here. Can you see? Just 43, that's 4 pips. Right here. 5 pips away. We will have hit TP. But my darling brothers and sisters, look at this. On an H1 time frame, I have taken my TP at this point, this red candle. And you have to wait for 1 hour, 2 hours, 3 hours. And you even be scared because you don't even know what's going to happen. 4 hours, 5 hours, 6 hours, 7 hours before you actually hit TP1. But luckily enough, that candle smashed TP1 and 2. So if you are in for TP2, as entering for TP2, I enter TP1, enter TP2, I will have made money from TP1 outrightly. I will have gone. Then I'll still make my money from TP2. But what am I trying to establish? I'm just only trying to establish the fact that TP before TP is a very good theory if you can put it into practice every time. You always save time wasting. You always make money on time while others are still struggling inside the same trade. So guys, you want to also keep that philosophy in your head. TP before TP is always good. Imagine I just sacrificed 5 pips and I made 52 pips, 50 pips, let's just assume 50 pips instead of 55 pips. Is that loss of, that's a lot of money. That's a lot of money. 50 pips is a lot of money. And I wait strategically for my twin trading to hit TP2. And if it doesn't hit TP2, it's all good. Once I'm in profit, I will have moved my stop loss. All right, someone talked about retaining profits. We're almost out of time, and this will be the last thing we discuss before we go. Retaining profit. Guys, pay attention. If you are the one asking about how to actually secure your profit and retain your profit, this is how to go about it. You can see at this point now, it almost hits TP1. Let's now say I didn't enter TP1. I enter TP2 outrightly. Or, yeah, outrightly. Or let's even say it's TP1. The minute I see this candle formation and it has gotten to this point, and I feel, do you know what? Let me remove my stop loss from stop loss. I'll move it to the entry price. At that point, if it now starts retracing and goes back to the entry price, you know, and it takes me out of the trade, I won't lose anything. I have been able to actually first break even to make sure I don't lose, even if the trade decides to retest. I have broken even. So I have now made sure I've made sure I will not lose any money. Okay. Me saying that I'm in 20 pips, 30 pips profit already, I will move my stop loss to my entry price, maybe 1 or 2 pips ahead of my entry price, so that I can even still take away 10 cents, 30 cents sometimes, depending on your lot size. It might still be up to $1. So that will help you make sure you don't even lose at all on that trade. Then the second thing now is how to retain that profit you've made. Right now, let's say I'm at this point and I feel, you know what, let me head for TP2. I now change my TP to TP2. Now, I'll now take my stop loss that I moved to entry. I will not even move it to this point, somewhere around there. Let me measure it with a ruler. Somewhere around there, I'll move my stop loss to this place. Let me mark it out. I'll move my stop loss to that point. You can see that with that now, even if the market decides to even retest and retrace back up, that means whenever it gets to this point, you can see heading towards TP2 on this candle, it tested that point, then it continued again. That means whenever it gets to this point and it moves up, it comes above this point, it breaks this point, my dear, I beg, I no do again. Just give me my remaining money. It will give me the profit I've made from here to this place, 37 pips. So that is how to keep your profits. It will give me my 37 pips. How to manage your trades. These are the things you need to know. And proper risk management is not just about using 0.01 lot size. You need to know, you need to be able to account for your remaining free margin. I will put everything into my video on MetaTrader 4 and trading for beginners. So you need to actually know how to manage your trade. And there are 2 phases of managing trade. You need to first break even. Break even first. That is to secure that trade and make sure you don't lose your money. Then the second thing is secure your profits. So when you are 50 pips in profit or 40 pips in profit, move your stop loss into 25 pips in profit. So that means you secure 25 pips. Even if you retest, you go home with 25 pips. On a standard lot size, you know what that is. On a mini lot size, you know what that is. On a micro lot size, you know that is $2.50. That's a lot of money. If your daily target is $10, you need just 4 of that. Okay, so let's now say I've secured 25 cents now, 25 pips now, and it keeps going on. It gets to 75 pips. I'll move it up. I will secure 50 pips. It moves to 100 pips in profit. I will move it up. I will still secure profits. So that means if it retests at 75 pips, I will walk away with 75 pips. You know how much 75 pips is. So guys, that is how to secure your profits, how to break even, and how to make sure you maximize winner's move. Yes, that is how to make sure you maximize your time. I've showed you how to maximize time by taking profit before profit. I've showed you how to secure your trade, breaking even, and I've showed you how to actually keep your winnings. And if you have more than 0.01 lot size, if you have a 0.2 or above, there's a way you can actually still take partial profit. You go into your trade in MetaTrader 4, you click on the close trade, then you go up. If you're using a 0.02 lot size, you change it to 0.01. So it will close your trade in half. It will close half of your profit. It will give it to you. Then it will continue that trade with one lot on 0.01 lot size.